Yields back. We'll now turn to member questions. The chair now recognizes himself for 5 minutes for questions. Dr. Cohn, you spoke in your testimony about Fed independence. We know an independent central bank is important in making sure that monetary policy is not subject to the whims of partisan politics. That does not mean that the Fed can't or shouldn't be held accountable to Congress and the public. Can you talk more about the limitations of Fed independence, where it's important for Congress to exercise its constitutional authority to conduct oversight?
Absolutely, Mr. Chairman. I agree with what you said. So I think the Fed has an arm's length relationship with the political system. It makes the decisions on the setting of its policies in order to achieve the goals that you gave it. And it is accountable to the public and to you. So you need to press it. Why did you make that decision? Why was it this way? How is that going to further your goals? I think the Federal Reserve benefits from good, focused questioning from the Congress.
Switching subjects, Dr. Cohn. In the past 2 decades, the Fed has moved to the ample reserves regime, and since then, we've seen a dramatic increase in the size of the Fed's balance sheet, stressing dramatic. In 2022, the Fed began quantitative tightening and has decreased the size of its balance sheet. Chair Powell has said that the Fed will stop QT when reserve balances are somewhat above the level judged to be consistent with ample reserves. Where should the Fed look to target its balance sheet size? Is there an ideal level of reserves they should aim for?
So I think what they're aiming for is, as Chair Powell said, is to reduce its balance sheet until reserves are just large enough to stabilize market interest rates. And it is looking very carefully at those market interest rates to see whether it's gotten down that far or not. And so far, the market rates have been stable. There's no sense of instability, so it's continuing to reduce its balance sheet. I think that's fine. I don't see it as a big deal as to whether reserves are 2 trillion or 1 trillion. I mean, the Fed has government securities on one side of its balance sheet. It issues reserves to the banks on the other side of the balance sheet. I think the ample reserves regime should work just fine to control interest rates, and that's what you need it to do.
Mr. Wang, you include in your written testimony a discussion of the supplemental leverage ratio and the Fed's regulatory relief during the pandemic. You write that the Fed's current regulations on the SLR de-incentivize low-risk activities like holding treasuries. Given the stress we've seen in the treasury market, do you think the Fed should reevaluate the SLR?
Thank you for your question, Chairman Lucas. And I absolutely agree. So the SLR is basically a regulation that makes banks hold capital based on the size of the balance sheet without regard to the riskiness of their assets. Now, when you're looking at assets, for example, like reserves, which are very liquid, have zero credit risk, or treasury securities that have no credit risk and very liquid, it does not make sense to have to hold capital against those. And looking across the world, there are also other countries who have regulations that don't require reserves in the SLR. So I think some adjustment there would significantly increase the capacity of the banking system and improve the functioning of the treasury market.
Dr. Cohn, back to you for just a moment in the time I have remaining. There have been many significant developments in our economy, the market conditions, the Fed's implementation of monetary policy these last 5 years. What are the issues you think the Fed should pay attention to during this framework review? Dr. Cohn.
So I think it should pay attention. It said it's going to look at the strategy. So I think it should look at what it did in 2020, assess whether that contributed to a delay in responding to inflation, and then change. So I think it needs the 2020 framework review stressed the strategy was, what do I do to counter the low interest rate, low inflation environment that 2010 to 2019 put it. Remember, interest rates are 0 for a lot of this. and it didn't think about a high inflation environment. So they need to have a strategy that's robust to all kinds of different outcomes. And the minutes of their last meeting suggest that's what they're trying to do. They're trying to modify that framework.
Thank you.